Oh my gosh, Cathie Wood and ARK Invest just released their new Tesla bull thesis. I have not looked at it yet. I'm so excited. We're gonna go break it down right now. We've been waiting for this for probably about 6 to 8 weeks now. It's always been coming like, oh, it's coming in 1 to 2 weeks for like the last 8 weeks. Anyway, it's here. Haven't looked at it yet. Super excited. Really hyper about this, and it's like 10 o'clock at night. But anyway, we gotta do this. This is great. Really quick, let's start with what Wall Street is projecting, okay? So Wall Street is projecting that by 2030, Tesla will do somewhere around just under $400 billion of revenue by 2030, okay? So Wall Street is at $400 billion, which if you use a 70 times earnings multiplier and some of the math that I did, I broke this down in another video, you get to a price of about $1,700. That's 2030, $1,700. If you use Tesla's gigawatt calculations and you use some reasonable estimates with that, you get to around double that, $700 billion. Now, my base case is around $750 billion, which puts the price somewhere around $3,200 in 2030, and a bull case of having this share price be around $6,000 in 2030, okay? That's what we've covered before, but folks, now we're going to get into what ARK Invest just said, and oh man, oh my gosh, I'm just taking my first glance at this here, and ooh, it's gonna be juicy, folks, it's gonna be juicy, so buckle up. Let's get the Apple Pencil and let's get right into it. Here we go. Oh, snap. ARK Invest price target for Tesla 2025. 5 years before what I'm using, okay? They're projecting to 2025. And remember, I was projecting 14 million cars. Maybe they'll do 12 million cars as a worst case scenario was my projection for 2030, okay? Keep that in mind as well. We've got a 2025 here. Here we go. Last year, ARK estimated that in 2024, Tesla's share price would hit $7,000 per share or $1,400 adjusted for the split. In 2024, based on our updated research, we now estimate that it could approach more than double that. What? $3,000 in 2025. Whoa! That is my base case scenario. Well, my base case scenario is $3,500 by 2025 and over $6,000 by 2030. They're thinking they could get to my base case or almost my base case in 5 faster years or 5 fewer years. That's crazy. How are they coming up with these numbers? To arrive at this forecast, ARK used a Monte Carlo model. Okay, so this is where you just put a bunch of data in and it spits out this really weird looking graph with a bunch of projections. It's just Google it, go to Google Images, type in Monte Carlo and you'll see it. High and low forecast incorporating 40,000 simulations, whatever. Okay, so they put it into their machine, fine. Okay, scenarios. Expected value, $3,000. This projection is our base case. Whoa! That's not even their bull case, $3,000. So their base case is roughly my base case 5 years later. And I like to be extremely conservative with my fundamental analyses. This is why I get pissed, and I did a video titled, I'm pissed about Tesla's valuation. Because people are ragging on me like, Kevin, you're too bullish, you're too bullish. I'm like, man, I didn't even include all the possible revenue because I do that as a way to be conservative. They're thinking we could get to my base case scenario 5 years earlier. Remember, my bull case, $6K, $3,500 for my base case. They're basically at $3,000 in 2025. This is incredible. They are at a bull case of $4,000, exceeding my base case in 2030. They have a bull case of $4,000 in 2025. We believe that there's a 25% probability that Tesla could be worth $4,000 per share or more in 2025. 25% probability that Tesla could be worth $1,500 per share or less in 2025. By the way, $1,500. If we go to the Wall Street scenario, we get $1,500 approximately in 2030. They think like worst case, 25% chance, or $1,500 or less, probably not much less, but a little bit less in 2025. This is crazy. This is all 5 years earlier. This is amazing. Okay, let's look at the numbers here. So cars sold. So this is now the 500K. Example bear case, 5 million cars. 10 million cars in their bull case for 2025? How? How are you going to achieve 10 million cars in 2025? I mean, maybe, but I'm going to pull up my Tesla ramp here. This is my Tesla ramp chart right here. And by 2025, I'm at 6 million cars. And that's including 2 new factories after Giga Berlin, Austin, Fremont, Shanghai all get to full capacity at 1 million each. Holy smokes. I mean, I get to maybe 6 mil cars, which kind of aligns over here with, that's their bear case basically. Oh my gosh. Okay, average selling price. Okay, so I use 42,000 as my average selling price. But I also include full self-driving in my average selling price. So I kind of lump that together. So I use 42,000. They're using a 2025 bear of 45K. Oh my gosh. And a bull case, their bull case of 10 million cars only uses $36,000 per car. Okay, interesting. So higher in their bear case, but lower in their bull case. I got it. Electric vehicle revenue. 367 billion. What? Oh my gosh. Okay. Here we go. So in their bear case, they're basically giving $0 of revenue to autonomy. And they're giving, in their bull case, $327 million in value to autonomy. Woo! I mean, my sales in my bull case for 2030, my sales, and this would be everything related to the cars, is around it's $672 billion. So my 2030, so let's put this, Kevin, 2030 bull is 672 billion by 2030, okay? If their bull case is 2025, and they're basically saying, if we add these together, that's about the same number. That's pretty dang close. That's $690-ish billion 5 years earlier. That's ambitious. They really think this that self-driving, the autonomy network, is gonna be really, really valuable. And they're really low actually on insurance. And I guess it makes sense if you're gonna put all your revenue into autonomy, you would not do that. My base case scenario for insurance has way more revenue. Wow. They're not excited about insurance. Now, this is also a company, by the way, that does not like Lemonade Insurance. So they are not excited about insurance, clearly here. Human driver ride-hail revenue. So they almost think that it's possible that humans could be doing the ride-hailing. Maybe the car drives automatically, but somebody has to sit there, and it's not going to be as profitable that way. This is insane. I'm going to highlight like the insane portion here. Let's pick a red color here, and we'll just put this red circle right here around this 327. That is a big number. But even their bear case scenario is very, very high. What? In their bear case scenario, they're using a 40% gross margin excluding credits for the car? No freaking way. Elon's vision was getting to 30% in the future, like long run 30%. They're saying 40%? Okay. All right. Interesting. Okay. All right. I mean, maybe they're really valuing that full self-driving high, but wow. Total gross margin, 43%, 50% over here. Well, over here, again, they're using the autonomous, so it makes sense that the margin would be higher here, averaged out. EBITDA margin, that's very, very high, 30 to 31%. Wow, this is incredible. Okay, then we've got a potential market cap. So market cap comparison. Market cap, ARK Invest thinks Tesla's going to have a market cap of between $1.5 trillion to $4 trillion in 2025. Kevin's bull case scenario, oh my gosh, has them at, okay, so my bull case scenario has them in 2030 at a $6.8 trillion market cap, and my base case scenario puts them at a market cap, well, let's do the quick math here really quick. So we're going to put a formula in here. Shares outstanding 1.1 times the share price in the future. There we go. So that puts them at about 1.12 is kind of my base case scenario for Tesla in 2030. Jeez. I mean, that's incredible. Oh my gosh. So my bull case scenario is about $7 billion in 2030. That's my bull, and kind of like, hey, in my opinion, my kind of like worst case bear case almost. I call it my base. I'm really just doing base and bull here is what I'm doing. They're doing bear and bull. Fine. So we've got, for me, I've got a bull of almost $7 trillion in 2030 with a base of 1.1 in 2030. they're really, really excited here. At least $1.5 billion in 2025 and $1.5 trillion in 2025 and $4 trillion over in their bull case scenario. Absolutely incredible. Let's see what else we have here. Okay, so let's see. Capital efficiency. Let's keep going a little bit here. Percentage of all Teslas on the autonomous platform. So they're thinking that worst case scenario, nobody really adopts the ride hailing. That's how they're using the estimate here. But they really think in their bull case scenario, up to 60% of users are going to be adopting this autonomous driving scenario or the ride hailing scenario, entering their vehicles into ride sharing. Very interesting. We pushed our forecast forward 1 year to 2025. We refined our estimates for capital efficiency. We added insurance to the business model. Barely, though. They're not excited about that insurance for sure. Okay, we have increased our assumptions for Tesla's capital efficiency. Previously, we estimated that Tesla would spend $11,000 to $600,000 per incremental unit of capacity in 2024. In 2019, Tesla spent $1.3 billion on capital expenditures and produced 509,000 vehicles, an increase of 144,000 vehicles from the previous year, right? Suggesting that CapEx per incremental vehicle was roughly $9,200. Okay, got it. So actually way lower than their expectations here. They're thinking maybe on chart for about $10,330 in with a 60% increase in vehicle production. Okay, probably overstates their thinking. All right, let's get to a little bit more info here. So ARC estimates that Tesla could achieve better than average margins on insurance thanks to highly detailed driving data. Absolutely, completely agree. But they're not really excited about how much money it's going to make. Right now, we know it's only available in California. Okay, because its vehicles have better than average safety profiles, Tesla should be able to use real-time data to offer insurance in its vehicles, pricing it dramatically lower, basically. Pricing it dynamically, rather. Lowering customer acquisition costs, increasing margins. Gotcha. Okay. If they were to sell to 40% of vehicles with their own insurance, Tesla's insurance revenues could approach $23 billion annually in our bear case. In our bull case, Tesla's insurance revenues let's see, will be incorporated into a platform fee. Okay. So that explains why this insurance number was so low. Because I'm like, wait a minute, why is this insurance number so low in their bull case? Basically, they're thinking the insurance is something that's going to be part of this $127 billion. That makes me feel a lot better because I broke out the insurance and I'm like, whoa, that is pretty freaking low. So that makes sense. Human-driven ride-hailing. ARC's bear case now includes Tesla's opportunity to launch human-driven ride-hailing service. And this is their bear case, right? That's supposed to be the highlighter here. There we go. Previously, ARC detailed that a human-driven ride-hailing service would have a lower cost structure than of incumbent companies, laying the foundation for a fully autonomous ride-hailing network. In our bear case, ride-hailing could add an additional $20 billion to operating profits by 2025, increasing our price target about $500. So they're putting about $500 of weight on ride-hailing with human involvement. They think human involvement at first, and basically as sort of a fail-safe of the limiting the downside of a failed autonomous service, right? If people don't take up the autonomous service, like there's no guarantee that humans are going to be comfortable with this, right? Okay. Then in our latest valuation model, ARC assumed that Tesla had a only 30% chance of delivering fully autonomous driving in 5 years. Okay, in 5 years. Now, ARC estimates that the probability is 50%. So they think there's a 50% chance by 2025 that we will have full self-driving and full self-driving ride-hailing. ARC estimates that Tesla's vehicle fleet gives it access to 30 to 40 million miles of data per day, up from 20 million per day last year. If successful, Tesla could scale its robotaxi service rapidly, allocating the additional cash in turn to manufacturing capacity, serving its autonomous network. Oh my gosh, they're basically saying they're gonna get so rich off the robotaxi network in their bull case scenario that they're gonna have so much extra freaking cash that they're gonna be able to scale more factories. That's how they're getting to these crazy numbers. so quickly, because I'm like, where is the money? I'm thinking to myself, like, for my scenarios, like, where is the money going to come from to make all the factories that you would need in your bull case scenario here, Cathie? The bull case scenario is 10 million cars sold in 2025. I'm at 14 mil in 2030. I'm at 6 mil in 2025. Where's that money coming from to produce these extra factories? It's built into their autonomous ride-hailing bull thesis here. Tesla could generate an additional $160 billion in EBITDA by 2025. In our bull case scenario, ride-hail would account for the majority of Tesla's enterprise value. Whoa! Basically, they are so bullish on the ride-hailing that they basically think this could be, this is the real profit center for this company here. It's not selling cars, it's ride-hailing. They're very, very bullish on this. Remember, I incorporated ride-hailing and autonomous and all that, all those potentials, just into the cost of the car. And the reason I did that is, look, if the average cost of the car, because they introduced maybe a $20,000, $25,000 vehicle, if in 2030 the average cost of the car is including full self-driving, 2030, somewhere around $42,000, including the self-driving, and there's maybe a small commission to use your car in ride-hailing, but it's your car, you're making the profit from this, minus a small fee or whatever, a service fee for Tesla. That's how I came up with my $42,000 in revenue per car. They are much, much more bullish here. So note that autonomous driving pushes the distribution of our expected price targets up significantly, as shown below. Yeah, you don't freaking say. The first chart represents the likely distribution of possible price targets in our Monte Carlo analysis, while the second chart shows scenarios. Okay, got it. So their base case here, $1,500, expected value, $3,000, but they have a bull case scenario here of $4,000. And they really think there's a small chance. Oh my gosh, look at this. I mean, they're roughly estimating here that there's maybe even this 5% chance of Tesla literally just going to the moon and having this share price of potentially $8, $13, $18, $23,000. Very, very bullish. Scenario mix within price targets shown above. Okay, these are the odds, right? Tesla delivers robotaxi. This is really where they think the money is, right here in the robotaxi. And they've got this scenario over here, this green one, that's Tesla produces more than 4 million vehicles, but does not meaningfully sell into vertically integrated ride-hailing. And that's what I think. So I'm a little bit more of this green here, that this is like, robotaxi is going to be a thing, but it's going to be more of a profit for the person who bought the car, not necessarily for the company. Now we'll see. And look, all of this just makes me more bullish, right? I'm not going to revise my estimates right now. I'm going to digest this a little bit more, but this just makes me more bullish. I mean, I bought more Tesla today in the dip. If you watched me live, you saw me buy another like $86,000. Like, I put my money where my mouth is. Tesla goes down and I say buy the dip. What do I do, folks? What do I do? Come on. We got a shirt, okay? To the freaking moon. We got the rocket ship, and on the back of this shirt, which you could get at metkevin.com/merch, it says buy the dip. Okay, in many of our low-end cases we modeled, production constraints limit Tesla to fewer than 4 million vehicles produced per year. Exactly. That was my concern, is that, like, without this crazy inflow of cash, which they're thinking is going to come from autonomy, it's going to be slower to ramp to get to all of these vehicles produced. Well, let's switch angles here. There we go. While technological and logistical bottlenecks prevent the launch of both human-driven and autonomous ride-hailing networks, maybe at the same time, as shown in gray. Got it. That's the last scenario. When production is not constrained, a human driver ride-hail network increases the expected price target range. Okay, all right, got it. So they're still giving a boost here, even if we have human-driven vehicles. In ARC's Tesla price target, please note that electric vehicle and robotaxi business lines generate roughly 40 and 50% of Tesla's expected market cap, presumably here, respectively, is what they're saying. The average values from our Monte Carlo simulation, respectively, in 2025. Bingo, exactly. So the way they're getting to this really, really bullish thesis here is they're putting in their bull thesis way more money on this robotaxi taking over. And in their base case scenario, they're kind of in line with me in production. In production, I was thinking maybe 6 mil by 2025. Without this big push in robotaxi, they're thinking 5 mil. So they're actually a little bit lower than me on that. But their price target actually exceeds mine. So, and that's because they think margin is going to be actually way higher than I'm even estimating it at. They are very, very bullish on the Tesla margin. Conclusion, given our updated updates outlined in this blog, ARK's price target for 2025 is $3,000. My gosh, my base case scenario is $3,000 5 years after this. And again, maybe I'm too conservative. Like some people, look, I got a lot of hate for my price targets, but I'm like, look, hate on me all you want. I don't think I'm gambling. Like I think I'm being conservative. Listening to ARK here now, I feel like I sound even more conservative. Like, wow. Wow. But anyway, ARK, by the way, if you want to chat about this and you want to join me in my private live streams, remember to take advantage of that coupon code. That does expire very soon as we're waiting for those stimulus checks to come in. Use that 38% off coupon code. Stimulus checks, I'm expecting to probably end this either this weekend or Monday. We'll see where we want to end this. Mostly because there are people still emailing me asking to get into the programs with their stimulus funds. And can't wait to see you in the private live streams that I hold every single day that the market is open. And you get all my buy-sell alerts as well. So check that out, link down below. Let's keep going here. We published our model on GitHub. Okay, cool. So we'll check that out. We do not... Oh, whoa. What? Oh, you gotta be freaking kidding me. What? Oh my God. This is the gift that keeps on giving, folks. Are you seeing this? We do not model Tesla's utility energy storage or solar business in our models. They're not even modeling the power packs. Are you freaking kidding me? This is going to be such a huge profit center in the future. Oh my God, you think these price targets are possible and you're giving zero value to the energy division? Oh my gosh. This is the most bullish thing I've seen in Tesla or about Tesla like ever. Oh my God. What? What? Oh, I'm melting. Oh my gosh. They are so bullish. Wow. That is freaky, okay? Let me go to my base case scenario here really quick. For me, okay? This is my base case scenario for 2030. And like, I'm happy with this. Look, if I get to, and I think I'm going to exceed this because I tend to be very conservative when I do these estimates. I think I'm going to be at least a 20% return year over year compounded for the next 10 years investing in Tesla. And some people after 2020, like especially investors who started in 2020, it's like, 20%, I made 80% in 2020. 2020 was an anomaly, okay? Warren Buffett's average long-term rate of return is 17%, and that includes the crazy high inflation years where rates of return were substantially higher back in the 70s and 80s. So keep that in mind. But anyway, I think I could basically match Warren Buffett at the very least with Tesla in sort of and this is with my base case scenario on Tesla, not bullish. There we go. That's my base case scenario. My bull puts me at about a 24.2% rate of return. I think we're going to get to this in 2030. But look, folks, I mean, I'm including energy. I'm including way more money. But then again, 4x the insurance over ARK 5 years later. That makes sense. I'm including way more money over here in energy. But in their bull case scenario, they think they can get to this kind of revenue in 2025 for their cars, which I don't have projected out until 2030. This is extremely bullish. If you are a Tesla holder and you're investing off numbers that, in my opinion, like these numbers that are conservative, and I know some people are going to be vomiting, thinking like, that's conservative? Fine, whatever. ARK should just make you feel even freaking better. I mean, just literally rocket to the moon. Check out the course link down below. And folks, we'll see you in the next one. Thank you so much for watching. If you found this helpful, consider sharing. And wow. Bye.